Hello traders, welcome to the Tradeinvest market wrap-up for Thursday, October 31st, 2013. This is a wrap-up for the European zone that we trade. We trade the FGBL, which is also known as the Eurobond or Eurobond market. It's a futures market. Before we do any trading on any particular day, we should always check out what news is happening, anything that can affect our markets. So let's bring on Forex Factory. Obviously this is not the only source of news that you can use. This is a great one to give you scheduled releases of economic data. So if we have a look at Thursday, October 31st, look at around here where our market comes online. The particular news out today that we would probably want to take note of is the unemployment rate. It's got an orange little factory here which says medium impact expected on the market. It's going to have some sort of impact, so what really we need to do is understand what time it's coming out and know that the market's going to be affected in some way, and the way that we usually trade it is I stay away from when the news announcement happens, let the news announcement come out, let the market settle down, let it react how it wants to react, and then we can pick something as far as the trade goes up out of that. Yesterday in the news we had a fairly hard-hitting news item that came out, which was actually the FOMC from yesterday, which gave the market a big drop. Let's have a look at this 60-minute chart now. Just get rid of that one. So this is the 30th, which was Wednesday, and then you've got Thursday here. So on Wednesday, we had the market push up, push up, push up. We're making new highs. We're right at the highs. The market over the past couple of weeks has been very, very stagnant and very, very slow, a slow, grindy market on the way up. This news here, the FOMC, with the market dropping so far so quickly, is great news for us as day traders, because what it does is it creates just opportunities for us. When sellers come in like that nice and hard, what it does is it attracts a few more people back into the market, and the market will start opening up again, and a bit more movement, a bit more bounce around, which is great for us as day traders because we can take a lot more advantage of a bouncy market rather than just a sideways, slow, grinding market. So this is what happened on the day before. We've opened up here today. We've gapped up a little bit, and the thing I like about when a market drops, when it's at the highs and it holds down there like that, is we've got a bit of room on both sides. So today when the market opened, I would have thought to myself, well, I did think to myself, we've got good opportunities to go long. We've also got good opportunities to go short today because there's room on both sides. It can come up and test the highs of yesterday. It can also continue on with that downtrend that it started yesterday. Now, we said about the news just a minute ago. You can see here, this is basically where the news has been released and the market's reacted to it and it's pushed right up. So you can see here, it's come up towards the high. It's having a look at the high, and basically the news has pushed straight through it and it's been able to push right up. It did get a fairly quick sell-off back here, but they've managed to hold relatively this level to the end of the day and see out the whole day basically on the upside. Right, so let's look quickly at the 1 minute chart and how the market panned out as far as different opportunities that came along throughout the day. So we had that drop. You can see that drop yesterday here on the news on the back of the FOMC. And I'll just open up this market again a little bit. Market's opened up, pushed up a little bit, and it's fairly slow. We've got that slow grinding sort of action in the morning so far. And then what we were looking for, once it pushed up, it's pushed up again. What I was looking for at this particular stage is the market to give us an indication of a direction that it wants to go in. Now it's tried to go higher a couple of times. It's bouncing off this 141.68, not being able to go lower than there. So I'm looking for it to break up a little bit. And now that it's broken up, this is probably the third or fourth time that it's actually broken up and tried to go a little bit higher. So this particular PowerPoint here, we were quite happy to take on to go long with. Right, and we entered into the market at about 141.82. Oh, not at about, exactly 141.82 to go long. And the market started pushing up, and then the news actually came out and helped our trade, and we got the 8 ticks out of that. And you can see that the market's really reacted here and pushed right up into new highs territory. So once the market's done this, you basically, the way that we trade, we're looking for pullbacks within any of the actual moves here. But after it pushes up so fast, so quickly, You'd also be looking for it to either consolidate and continue on its way up, or consolidate and look for signs of it rolling over and maybe coming back down. So this is the first sign that it's going to roll over. It's bounced off here. It's consolidated here and gone sideways for a nice amount of time, but it started to break down below here. All right, and then when this next high comes along, this high doesn't reach the previous high, and it starts coming down again. So when it actually breaks this 16 for the second time, we're looking back on the short side. And this is getting towards late in the afternoon, and there's some good opportunities around here, picking out any of these sort of pullbacks or somewhere to go short on any of these particular areas around here I liked. And then it continued down for a little bit, and finished off for the rest of the day in the afternoon just getting in a bit of a sideways pattern and just holding the area, slightly grinding up, and really the opportunities have gone out of it in the afternoon, and it really slowed up. So there was some good trading on this particular day, some sharp chances, but they were there for sure. So thanks for listening to this wrap up. Look forward to talking to you on the next one.